Snap bears can admit one thing. This deal is certainly a controversial one. In the few research notes published so far, analysts use phrases like total junk and ephemeral value to describe the company. And take a look at this chart put out yesterday by Aegis Capital Research. Some investors are spooked by the line, showing a big drop-off in user growth in 2017 and beyond. But that's the key thing to know about IPOs. Their prices are not always determined by models and estimates and pen and pencil fundamental research. Much of it is based on momentum, and Snap seems to have enough of that to drive demand. Sources I spoke with yesterday said that Snap and its advisors have communicated to the market that they'll likely price $1 or $2 above the range. That could yield a market value of $25 billion, which was the target they had been initially seeking before their IPO even launched. They also could benefit from scarcity. There have been few tech IPOs in the last few years, and they're only selling 14% of the company. And in a filing this week, Snap disclosed that 50 million shares, or 25% of the offering, would be sold to investors who agreed not to sell for a year. Even if institutional investors seem skittish, though, deals like this one can benefit from retail investors or individuals who know Snapchat, who have seen their kids use Snapchat and believe it will pop on the first day of trading. My sources say advisors are expecting individuals to fill in gaps if institutional investors, which can sometimes be a little hard to read, aren't willing